All right, welcome back from break. We will continue with our next segment of the OVTA, and that will be about, we send a lot of messages and notices to people, and they don't always know what to do from there. So we're going to have Lindsay Meadows and Katie Zuka educate everybody about what our next steps are. So we try to minimize as much confusion as possible. So Lindsay, are you available? She might be trying to get on. Okay, there we go. I will turn it over to you. Thank you.
Hey, good morning, everybody. My name is Lindsay Meadows. I have Katie Zuka here with me. I am a tax examiner specialist for the Sales and Use Tax Division here at the Ohio Department of Taxation. Katie is representing our Bankruptcy Division Counsel. I myself have been with the department here for 14 years. I work in the Sales and Use Tax Division as a tax examiner specialist and have also worked in a variety of different areas in the tax department over the 14 years, personal income tax division primarily. We represent the Ohio Department of Taxation in this presentation about billing, notices, and assessments for the Business Tax Division, and we are going to go over all the billing programs today. So we're going to go into details about the entire collection process and the recommended methods of resolving the bills and the assessments. So we do have a legal disclaimer here. The information provided in this presentation is given for the general audience guidance only and doesn't constitute legal or tax advice. So anyway, any facts and circumstances to your situation that may impact any answer provided herein may change later, so stay tuned for changes, but as of today's presentation. So we're going to want you to walk away with an understanding of why the department issues billing notices for the business taxes and how you should respond to them in any phase of the billing process. We're also going to cover what happens to accounts when a liability has progressed from a billing notice through certification and how to resolve those matters. Business taxpayers have specific filing requirements for each tax account that they hold with us here at the state. Each return needs to be filed electronically for any filing period that the account is actively doing business. When the filing requirement or corresponding payments have not been made, a notice to initiate the billing process is generated and sent through the mail. Once the billing notice is sent, the timeline will progress until a sufficient response is received. You'll find that the due date and the response options are all on the letter. If a response has not been received by the due date, the obligation is then going to be eligible for an assessment. At this time, an assessment letter will then be generated and interest and penalties would be applied to any outstanding amount due. Again, all filing and payment options are found on the assessment notice, just as on the original bill provided. The taxpayer has a 60-day window to respond to the assessment notice before it's eligible for certification at the Attorney General. So, understanding your notice, whether the required response.
Lindsay, it's time for our first poll question.
Oh, yeah. Okay.
Sorry, we have everybody going right out of the gate. So the first question is, the billing timeline for an outstanding obligation follows what order? Is it billing notice, notice of assessment certification, or notice of assessment, billing notice, certification, or billing notice, certification, notice of assessment? So give everybody a few more moments to respond. Again, for continuing education credits, we do need you to select something. It does not need to be the right answer. We will give you the right answer in just a moment. But we do need you to click on something. And if you're having connection issues, I resent the message in the chat just in case anybody refreshed their page or anything of that nature. But our website is ovta@tax.ohio.gov. So if you're having any issues, please send an email to that email address and we'll be able to take a look at everything. So Lindsay, what's the correct order?
The correct order is billing notice, assessment notice, certification.
Fantastic. Thank you so much.
Okay, so understanding these notices. Whether the required response involves taking action to file an outstanding return or making the payment for an outstanding amount due, all of the response options are going to be found on your notice. The department has updated our website, so the response resources are very convenient. We have several options, and this is to meet our taxpayers where they are. Not everybody has the same method of being able to respond. The self-help e-library can be found at tax.ohio.gov, and you see an image of that here. It's at the bottom of every page that you see, and if you click on the self-help e-library icon, it's going to take you to a page that provides an example of each notice that the department issues. So you'll see also a quick link for the online notice response service, which is also one of the recommended electronic response options. If our taxpayers have a need for electronic resources, our Welcome Center in Columbus may be able to assist. We have a computer available for taxpayers to self-serve, as well as a representative available to receive documents or provide information in person. This Welcome Center is open Monday through Friday, 8 to 5. For concerns of the taxpayers that don't have time to address matters between Monday through Friday or 8 to 5 business hours, tax.ohio.gov also provides a contact us link that can be used to email the department regarding your specific tax concerns. Representatives are here and available during the week to respond to those questions in a very timely manner. It typically takes 48 hours or less. Before we go into further detail about the final actions that can be taken on a past due account from these billing notices, let's circle back to the beginning and teach you a little bit about the different types of bills that you may see. So to begin, any notice you receive has an explanation and provides links to the response resources in our self-help e-library. There are six specific sections designed to provide information for the variety of business taxes that the Ohio Department of Taxation administers, as well as some personal tax information. So you see here, section 1 is understanding your individual income tax billing and assessment notices. And section 2 is some additional information, individual income tax help. Section 3 is something we're focusing on today. This is the understanding your business tax billing and assessment notices. And section 4 is also some information about the Ohio Business Gateway. Section 5 is vehicle and aircraft tax help. And 6 is actually an additional section that's going to provide OVTA archive content from the past, also regarding business tax billing and assessment. So you might want to check that out. While this presentation does include information pertinent to personal income tax, I'd like to clarify that the focus of today's presentation is going to remain on business tax billing and assessment processes. So the self-help area of our website, as well as many others, focuses on educating our taxpayers to prevent any issues, maintaining the responsibility of holding a tax account with the state. In some cases, the taxpayer doesn't know or recall all of the information regarding their filing requirements. This is likely how one of the first notices that we send out is the most frequently issued. So I implore you all to take a look at tax.ohio.gov, as many of our callers seeking assistance are able to be directed to the information found here as a resolution to their issue. While representatives are ready and available to provide call center assistance, we can all appreciate the ease in being able to self-serve without reaching out for help. So one of the more common notices, like I said, is sent to the taxpayers is the delinquency notice. Delinquency notices are sent to any accounts that have an unfulfilled filing requirement. This notice is slightly different than other bills because it's simply a notification that action needs to be taken and doesn't immediately calculate an amount of tax due. Instead, the ideal response is to either file the recommended return or remit any necessary payment, or provide filing confirmation or other documentation showing that you fulfilled that requirement. A common issue is that the taxpayer may feel as though they had completed the return of the filing process on the gateway And turns out that the return is still stuck in the checkout, file, and pay process. At this time, the taxpayer just needs to sign into the account, remit that return, and then any appropriate payment that goes along with it. Oftentimes, taxpayers will submit a copy of their payment-only confirmation and don't realize that an actual return is necessary to be filed. If the account was actually not active for the reporting period in question and needs to be closed, we have a form called the Business Account Update Form, and that may be sent in to close or maybe adjust the effective dates of the account. Again, you have the option to file a return online via the gateway or use the telefile system for our county vendor's license and annual commercial activity tax accounts. As mentioned in the previous slide, this is our business account update form. You can find it at tax.ohio.gov using the form search icon at the very top of the screen. It's available on every page. You type in the full name, business account update form, or you can just type in the letters BAUF for your search. The PDF fill-in will appear, and you can either print that out and fill it in, send it in via postal service or fax, but we really recommend that you use the online notice response system to respond. It's just very fast and easy. For the cancellation of an account or an adjustment to the active dates of a business, you can submit with this form. Both are potential response options to these notices that you receive for business tax accounts. Other requests that can be submitted using this form are to update a legal name or trade name, update any of the primary, mailing, or location addresses for your business, and as mentioned before, the cancellation of sales and use tax accounts. A county vendor's license can be moved from one location to another as long as it's within the same county using this form, and employer withholding accounts, pass-through entity, commercial activity tax, petroleum activity tax, next-gen E911, financial institution accounts, all can use this form to close for account closures. Some requests do require some additional documentation, so please see the instructions on the form for your specific requirements. So please remember that filing a return is required for an active account. Even if there were no taxable sales or revenue for that filing period, a zero tax return is still required to be filed. If it's determined that no business was done and should no longer have an active account, you should respond with a request to close the account as of the last day of business, even if this occurred further in the past than the currently delinquent filing period. In some cases, a new business may anticipate a start date far earlier than what reality had in store. So if the vendor's license is active, it's very important to file a zero tax return for any periods which no tax was collected. In some cases, it would benefit the business to send a BAUF to change the business start date to when they actually started collecting tax. If that was later on than they expected, this could potentially alleviate a filing requirement for several periods where no business was done. CAT account holders will be advised to cancel the account if taxable gross receipts fall under the new threshold pursuant to House Bill 33, and that was effective January 1st, 2024. You can see the example of a delinquency notice bill displayed here, and there are no amounts due listed on this contact. You have 20 days to respond to this notice by either filling the return and remitting payment, or if applicable, just close the account. As you see here on this notice, option 1 provides information to file the outstanding return. The options listed here are gateway and telefile. Option 2 instructs you what to do if the return has already been filed. Provide a confirmation of the filing using a confirmation number, or provide a copy of the return. Please note, a common issue here is that a payment only was made for the tax amount due, but no return was filed. So in this case, you would actually return to option number 1 to respond to the notice. Option 3 provides you the opportunity to close the account as of a specific date. There is a little place on the form that you can just fill that actual date in. In this particular scenario, you don't need to send in a BAUF form. Using the option on this notice is sufficient. If the notice is not responded to by the due date, it is eligible to progress to the assessment phase, and some taxpayers may need assistance with filing. The Department of Taxation has customer service representatives available Monday through Friday, 8 to 5, to help provide assistance for the gateway or any other tax questions you may have. For the business taxes, our phone number is 1-888-405-4039. And for personal income tax, it's 1-800-282-1780. There's also a way to resolve potential issues you may experience when you're using the gateway. If you have a gateway related issue, you are able to create a case within that platform and send it along to us for review. A representative from the department is going to be available to review the case and provide a response to confirm your resolution or provide additional guidance for you.
All right, so it is time for our next poll question that should be heading its way to you. So the question is, a delinquency notice informs the taxpayer of what? First option is the filing requirement has not been met. Next option, the payment has not been remitted. And then the third option, an adjustment has been made to the tax return on file. So give you a few more seconds to respond to that. If you are having issues, I know we had a few messages in the chat about that. Please send us an email to ovta@tax.ohio.gov. We want to make sure that everybody who is in attendance is getting the appropriate credit. If they're seeking continuing education credits, we want to make sure that we're doing what we can to assist you there. So we have the vast majority of responses in. Lindsay, what is the correct answer here?
The correct answer is that a return has yet to be filed. A return needs to be filed when a delinquency notice has been issued.
Fantastic. Thank you so much.
Thanks. All right. So in more information about the delinquencies, as you see here, there is a sample of a delinquency assessment notice. It now shows that there's an estimated tax amount due along with interest and penalty. So I'd like to reiterate that the tax amount due on a delinquency assessment notice begins as an estimated amount. Simply paying this amount on the assessment is not going to satisfy the filing requirement to file the tax for that period. Payment only is not sufficient. Once a tax return is filed, a corrected assessment notice will be issued with the updated tax amount due and any interest and penalty pertaining to that. A response is still required, and once received, will either cancel, satisfy, or adjust the assessment. In any of these scenarios, you will receive a notice with the current status of this obligation. So if an assessment is updated with information from your filing, a corrected assessment will be issued to confirm the current amounts on file. If the assessment reaches the certified phase of collection, though, no notices are going to be sent from the Ohio Department of Taxation. The next notice is just a simple non-remittance bill. This confirms that there is an outstanding balance on an account that does have a return already filed. The amount reported due has just not been paid. So the most common responses to this bill are to remit payment or to respond to the notice with proof of payment if you feel like you already sent the payment in and it just hasn't accurately been applied. And then this is an image of that bill. This is what's sent to the taxpayer. You can see here that the amount reported due on their tax return has yet to be paid. No adjustments were made by the department. The resolution is to make the payment or provide proof of payment. The next notice type sent out are variance notices. The response required for a variance notice is just to pay the amount due. But what this is the next notice type, it notifies you of either an increase or decrease of the reported amount due. Amounts due will need to be paid using the gateway or telefile or utilize the voucher at the bottom of the notice or assessment. If an overpayment is determined from the variance, This amount the refund that is expected will be shown on the notice due as well. So this is an image of the variance notice. It indicates any amounts made to this, any adjustments made to the amounts on the specified line items here. It uses an as reported column and an as calculated column to show those differences for you. The response required for a variance notice with an amount due is also known as a non-remittance variance notice, is simply to remit payment or submit proof of payment. And this notice is essentially a combination of the previous two notices. Not only was there an adjustment made to the tax amount due, but this resulted in an increase, leaving an outstanding balance. The payment must be made to resolve the issue, and all of these bills can be paid via the gateway or telefile if regarding a county vendor's license. Okay. So upon reviewing each of these different notice types and how they are different, one thing that remains consistent among all of them is how to respond. Either pay an amount due, respond with documentation. Except for the delinquency notice, which in most cases also requires a return to be filed. Now, that sums up the billing notices that are sent from the Ohio Department of Taxation for business tax accounts. However, there is another set of notices that are sent for they're generated for sales and use tax, and they may be sent to businesses or non-business owners. This billing program is an audit for the casual sale of motor vehicles, and these sales are defined as the transfer of a motor vehicle title between two individuals who are not affiliated with a licensed dealership. The transfer of a watercraft or outboard motor is generally taxed in the same manner as motor vehicles, so you may also receive a similar notice for these transactions. A questionnaire is sent to the seller listed on the title of a motor vehicle just to verify the purchase price. If no response is received by the seller, a secondary questionnaire will then be sent to the buyer with the same purpose, just to confirm the purchase price. In either scenario, all notices can easily be responded to using our electronic forms online. This platform was specifically created for this billing program, and it will submit the form for review without the need to create a username or password. This is a very convenient option for our taxpayers who don't regularly have to send in correspondence to the tax department. The only information required to respond to these motor vehicle billing notices is found on the letters you're mailed and any documents regarding the sale of the transaction, such as an invoice or a bill of sale. Upon receipt of this response, if a tax amount due is determined, this will generate a motor vehicle tax due notice. Please understand that the department is in no way trying to tell the buyer or the seller how much the vehicle should have been sold for. This is not the intention of the program. The review of the title transaction on whatever the sale amount actually was, the amount listed on the questionnaire is an estimate based on the fair market value of that vehicle type. If no response is received from either the buyer or the seller, a tax amount due notice will be generated based on this estimated amount. So the motor vehicle casual sale billing program is also not to be confused with the tax exemption reviews. Those are a little bit of a different tax implication for other motor vehicle transactions. The Ohio law allows certain vehicle transactions to be made without paying sales tax, and more information on these specific exemption qualifications can be found at tax.ohio.gov using the vehicle tax link found under resources for businesses. Now, the motor vehicle bills and assessments are unlike the other billing notices in that electronic payment options are not available. These amounts due are paid using the voucher provided at the bottom of either the notice or the assessment. It's available on both. Motor vehicle bills and assessments are like the other billing notices in that it will progress through the same billing timeline. An amount due notice will be eligible for assessment as well as certification if it's not resolved. Now, to further inform you of the Ohio Department of Taxation's assessment process, I'm going to turn to Katie.
Hello, my name is Katie Zuka, and I am Division Counsel supporting the bankruptcy section of the Ohio Department of Taxation. In my role, I work on bankruptcy cases filed where the Ohio Department of Taxation is a creditor. Also, as part of my role, I review offers and compromise that relate to tax matters. In the past, I have also served as a hearing officer. I've been with the department for a total of 5 years. Now that Lindsay has given an overview on billings and other notices from the Ohio Department of Taxation, I'm going to discuss what happens when a tax balance becomes an assessment and the various collection practices that may occur if the tax is not paid timely. Also, during this portion of the presentation, we will talk about some specialized issues, and those include responsible party assessment, the habitual offender program, as well as how to file a petition for reassessment. Finally, we'll conclude by discussing some collection issues with the Ohio Attorney General's office and also offers and compromise. As Lindsay covered in her presentation, typically a taxpayer will receive a bill for a tax that is owed. If the bill remains unpaid, after 60 days, the department will send a notice of assessment. The notice of assessment is a formal notice of tax deficiency pursuant to the Ohio Revised Code. The assessment contains relevant information, including the account number, the tax type, the tax period, the amount of tax interest and penalty, and instructions if you have questions or need additional follow-up. A recent law change results in assessments being mailed through regular mail. Now, this is a change. Our assessments used to be sent certified mail, but due to the law change, we are now sending those assessment notices through regular mail. It's important to note that the assessments are also available on Ohio Business Gateway for the business taxes and for individual taxes on Ohio Tax e-Services. A taxpayer can respond to an assessment in several ways. As Lindsay mentioned, if there is an assessment for a period where no return is filed, you can still go to Ohio Business Gateway for business taxes or Ohio Tax e-Services for income tax and file the missing return. Also, if you were asked for additional information in your billing, you can still respond to an assessment notice with that required documentation. Lastly, you can file a petition for reassessment if you disagree with the tax, which will be covered later in this presentation in depth. It's important to note that at the assessment phase, just like the billing phase at the department, the Department of Taxation cannot enter into payment plans with taxpayers, but if a taxpayer makes a partial payment, that amount will be applied to the tax owed. In cases where the tax amount is changed, so for instance, an estimated assessment is issued and then the taxpayer files a return, the tax commissioner can correct an assessment and issue a corrected assessment having the revised amounts due. This can reduce or increase an amount. And a corrected assessment will nullify any previously filed petition for reassessment. So if you disagree with a corrected assessment, if you disagree with the original assessment, you can petition that. If you disagree with the corrected assessment, you also need to petition that as well. And now I want to move, now a polling question.
Thanks, Katie. So the poll should be on its way to everybody's computer. The question is, which of the following is true about a notice of assessment? First option contains tax, interest, penalties, and details about tax owed. Second option can be challenged by a timely filed petition. Third option can be certified after 60 days if no petition is filed. Or is it all of the above? So we'll give everybody a few more seconds to respond. Again, if you are having any sort of connection issues, please send an email to ovta@tax.ohio.gov. If you are seeking continuing education credits, we do need you to select one of the options. It does not need to be the correct option, but we do need you to select something or to send us an email in the case of a connection issue. So ovta@tax.ohio.gov. So Katie, what is the correct answer here?
The correct answer is D. All of those above statements are true about a notice of assessment.
Fantastic. Highest percentage of people got this one correct at 94%. So kudos to everybody in the audience today. And I will turn it back over to you, Katie.
Great job. Now to move to a special assessment issue. By statute in Ohio, there are certain taxes that are able to be assessed against an individual person, even though the underlying tax has been assessed against a corporation. These taxes include, most notably, sales and employer withholding tax. However, they also include seller's use tax, direct pay use tax, motor fuel tax, tobacco tax, petroleum activity, and IFTA. The reasons for this special designation is that these are taxes that are collected by a corporation and held for the state to be remitted. So when those are not remitted, the state views it as, this is our money that's being held up. And so regardless of a corporation's ability to pay the assessment, and if they don't, we can certainly assess responsible parties for those taxes. This is something very important to keep in mind for business owners out there, as well as other key individuals in an organization who have the responsibility of filing and paying tax returns. The details about who can be a responsible party are set out in the code. Now, each of the taxes we talked about just now have their own responsible party or individual liability section, and you should please refer to those. I've included on this slide an example from the sales tax statute on who can be responsible for sales tax. But again, please check the code for the other taxes if you are interested. For sales tax, any employee who has control or supervision or are charged with the responsibility of filing returns and making payments can be personally liable for sales tax. Also, any of the officers, members, managers, or trustees who are responsible for the execution of the business's fiscal responsibilities. Most commonly, but not, this is not an exhaustive list, most commonly an owner or officer who has access to the bank account. But there's also many other scenarios that can fall under a responsible party. There can be more than one responsible party for a business. If there are unpaid taxes of the tax types that we listed before, most notably sales and withholding, the department will use any information in our possession to assess a responsible party to collect that tax. That again is tax that has been collected and has not been remitted, and we see that as being funds that need to be remitted to the state because they're just being held onto by the business. The liability for responsible party is joint and several liability. That means that the department can pursue one officer or responsible party for the entire amount of the assessment or another. However, if there are multiple parties, we will not collect more than the underlying assessment itself. However, each responsible party is on the hook for the entire amount of tax owed. Now, if a taxpayer is assessed as a responsible party, that is an appealable issue, and we're going to talk about petitions for reassessment in a moment. So, but a typical situation is that, say there's a sales tax audit of a business. If a sales tax audit is assessed and there's no petition filed, and say that tax remains unpaid and is then assessed against a responsible party, and the responsible party wants to appeal the issue, the only issue that they are able to appeal is the is their status as a responsible party. So they can present evidence and argue that they are not a responsible person under the statute. However, what they can't do is appeal the original audit assessment and the methodology and all that, because that appeal period for the corporation has already passed. However, their rights remain to challenge their status as a responsible party. One of the additional programs I want to bring your attention to is a very important program called the Habitual Offender Program. This program is to try to bring taxpayers and vendors into compliance for sales and withholding tax. Now, once the department, once a taxpayer gets to this phase, if they get to this phase, they will likely have received lots of notices. Lindsay went through in detail that we send delinquency notices when there's no return filed. We send non-remittance notices when we don't receive a payment. And those are just the billing notices. Then we also have delinquency assessments and non-remittance assessments. So by the time a taxpayer might be identified for this program, they've likely received a lot of notices from the department. However, if a business does not file or pay sales tax or withholding tax for 3 or more months in a 12-month consecutive period, or I'm sorry, in a 12-month period, or for 2 consecutive months in a 12-month period, then the business can be placed on the habitual offender program. When a business is identified for the program, the department will send a HOP alert notice that has details and instructions on what needs to be filed and paid and by what date. It's very, and let me note also that this notice is sent out via certified mail. So there's no question that the taxpayer has received it. If a taxpayer receives a HOP alert notice, I would strongly suggest that you get in contact with the department right away and develop a plan for how you're going to comply with the details and requirements on the instructions. And HOP will work with you to get yourself into compliance. And again, it's very important that you take action once you receive this notice. It's not going to help. It doesn't help anyone to ignore it. If the amounts that are detailed in the letter are not filed or the returns are not filed or the taxes are not paid as required, the habitual offender program may send an intent to suspend your vendor's license. The intent to suspend notice provides an additional 10 days to file and pay the sales and withholding tax. If this intent to suspend, if all notices go unheeded, basically, the department can suspend the vendor's license, in which case the business will be visited by a department employee who will post a sign that the vendor's license has been suspended. And again, the department takes sales and withholding tax very seriously. That's why there's special provisions for them, and that's why the habitual offender program exists, really to get those people into compliance, because once that sales or withholding tax is spent in other areas, it's gone, and then the business owner potentially remains on the hook, potentially via responsible party assessment. Now we're going to move and talk about tax appeals. This is a process that a taxpayer can go through if they disagree with the assessment. And so if you disagree with an assessment or a corrected assessment, or if you've had a refund that's been denied in full or in part, you can file a petition for reassessment. The objections that you may have with the assessment are many. You could disagree with the tax interest or penalty calculation, with the tax period itself, with the taxability of certain items, with the audit methodology. And again, we talked about responsible party status. If you've been assessed or as a responsible party, you can only, your petition for reassessment is limited only to your status as a responsible party under the code. You can also address situsing, apportionment, and any number of legal issues that you think exist with the assessment. The petition for reassessment must be timely filed. You do not need an attorney to file a petition for reassessment. And for the practitioners that are on this call, you often have been involved with petition for reassessment. It's really important that a taxpayer submit a declaration of tax representative or TBOR1 form so that the department can communicate with a tax professional or an attorney on a taxpayer's business accounts. However, again, you don't need to be an attorney to file a petition or a tax representative. And as we'll discuss in detail, supporting documentation along with your petition for reassessment is key. The petition for reassessment requirements is that a filed petition must be in writing, and the petition for reassessment must be received within 60 days of the assessment notice. The petition must be signed by the taxpayer or the rep. They must include all the objections that they have and documentation. And again, that TBOR1 form, if needed, that's a good time to submit it along with the petition, if you would like a tax preparer or attorney to be the point of contact for that petition. There are a few ways to file the petition for reassessment. We do have a form on our website that you can fill out and submit electronically or by mail. However, you don't need to use the form. You can also just write a letter saying, I would like to file a petition for reassessment, and indicate your name, the assessment number, and any other relevant information. You can file the petition electronically, by mail, or even by hand delivery at our Columbus office. On the petition for reassessment, you can also select a corrected assessment option if you feel like you have submitted all the information that you want considered with your petition. Otherwise, you can request a hearing. The hearings are held either via telephone, in person in our Columbus office, or virtual. Our preferred method is Teams, and that's if the taxpayer approves it. The taxpayer will receive a notice that a timely filed petition has been received. If you request a hearing, moving to a poll question.
Sorry, we have our next poll question, and that question is being distributed to everybody right now. And the question is, what is the time frame for petitions for reassessment to be filed? Is that 60 days from the date of the notice, 120 days from the date of the notice, or 180 days from the date of the notice? So we'll give everybody a few more moments to respond. I know I sound like a broken record at this point in time, but if you are seeking continuing education credits, we need you to select one of the options. It does not need to be the correct option, but we do need to have you interact with the webinar. If you are experiencing connection issues or anything of that nature, please send us an email at ovta@tax.ohio.gov. Again, that is ovta@tax.ohio.gov. We do have the majority of people who have answered a question at this point. So Katie, what is the correct answer here? Is it 60 days, 120, or 180 days?
So a timely filed petition for reassessment must be received by 60 days from the notice of assessment.
Fantastic. Thank you so much. I'll turn it back over to you.
Thank you. So if a taxpayer files a petition for reassessment and chooses the hearing option, they can have the ability to sit with a hearing officer, whether on the phone or in person, and present all the arguments they have with the assessment. It's important to note that hearings are informal. They're a discussion between the taxpayer potentially the representative, and the department's hearing officer. There's no briefing schedule, no evidentiary requirements. It is quite informal. During the hearing officer will listen to the taxpayer's contentions, receive any documentation, ask questions about the issues, and it's a back and forth between the hearing officer and the taxpayer and the rep. And during the hearing, the taxpayer can submit any documentation that they think supports their argument. And I just really want to emphasize how important documentation is to support a contention. And documentation can include anything, including spreadsheets, ledgers, invoices, journals, logs, account statements, affidavits, or even pictures. But it really helps the taxpayer's case if they have a document to point to when they make an assertion about a tax. Following the hearing, the tax department will produce a final determination of the tax commissioner, which will be sent to the taxpayer. Now, the final determination is a written finding, and it will contain information about the objections that were made in the petition and address them one by one. It's possible that after a hearing that the final determination might adjust the amount of tax downward, or it might uphold the amount, or it might just adjust it in part. And the same goes for an application for refund that had been denied. The final determination, again, will include the recalculated or affirmed tax, interest, and penalty amount. Once the final determination is sent out, the taxpayer has further appeal rights with the Board of Tax Appeals. However, those won't be discussed in detail here, but I want you to know that is an available option. Now to turn to the next stage in a collection process. So once an assessment is issued, as we talked about, there's a 60-day window in which the department holds onto the assessment and either awaits payment or awaits a timely filed petition for reassessment. After 60 days, if payment in full has not occurred, or there has been no filed petition for reassessment, or after the petition has run its course and there's been a final determination and there's been no payment after that, then the account will be certified to the Ohio Attorney General's Office for collection. The Ohio Attorney General's Office is the collection office for the Ohio Department of Taxation, as well as other agencies. Some of the big ones include the Bureau of Workers' Compensation, the Ohio Department of Job and Family Services, some of our state universities, state boards and commissions, public hospitals, and other government entities. So the AG's office handles collection on a great number of accounts, and tax included. Once an assessment or a series of assessments is certified to the Attorney General's office, there are additional costs that get added. The AG's office adds their own interest, and they also add collection costs. So this is just important to point out. It really behooves the taxpayer to pay an assessment before it reaches this stage, because it'll just continue to accrue additional costs, and that interest runs every single day that the amount remains unpaid. I want to reiterate that even if an account has been certified to the Attorney General's office for a delinquency notice, so the taxpayer does not file their return, they're billed and assessed an estimated amount, and then it's certified for collection. Well, you can still go onto Ohio Business Gateway and file the missing return. That will just prompt the AG's office and tax department to update our system. So if that does happen, you'll need to give it a day or so, and then the AG's office will have updated balances. And I would encourage you, if you receive a collection notice, to contact the AG's office and to work through any missing return issues that you may have. The Ohio Attorney General's office In addition to collecting with their own staff, using their own staff to collect from taxpayers, they also utilize special counsel who are attorneys and other collection firms to collect debts. So you may get a letter, or a taxpayer may get a letter from a different firm or collection firm, but it will reference the debt and what it's for, and it will be made clear that it's a Department of Taxation debt. The Attorney General's Office and Special Counsel can utilize all collection methods that are available under the law. They can take involuntary collection actions such as placing a lien on property or garnishing wages or attaching to bank accounts. At the Attorney General's Office, if an account is certified there, this is where the taxpayer can potentially enter in with a payment plan with the AG's office, with the AG's office approval. To talk a little bit about a special collection issue, about what happens when a taxpayer is in bankruptcy. That is the area of law I deal with at the tax department. And so if the taxpayer, whether it's a corporation or an individual, and they owe taxes, if they file a Chapter 11 or a Chapter 13 bankruptcy, those are bankruptcy types that there is regular income to fund a plan. And in those cases, the taxpayer should list the Department of Taxation as a creditor. Once the department receives notice, the department's able to file a claim in the bankruptcy case and hopefully get paid over time for those taxes. In a Chapter 7 case, often there are no assets to distribute. However, if they do distribute assets, the department will also file a claim if there's anything owed. Following a bankruptcy, commonly a debtor will receive a discharge. Now, what does that mean for taxes? It's important to note that there are certain taxes that are never discharged in bankruptcy. Most notably are trust taxes that we keep talking about, sales and withholding tax. So the bankruptcy code recognizes that those are special. Those are taxes that are collected or withheld by the taxpayer on behalf of a taxing authority. So those are not discharged in a bankruptcy. Also, there are specialized rules on income and gross receipts tax. It depends how the age of the assessment, when it was assessed, and for what year in vis-a-vis the bankruptcy. So it's a complex determination for discharge. What'll happen if a taxpayer receives a discharge is that they will likely contact the Attorney General's office, who will inform them of the discharge status of all their accounts per year. Now I want to turn to another special program that the department has for settling tax debt, and this is the Offer and Compromise program. Once the Attorney General's office has a certified account or a group of certified accounts, and the tax debt is more than 1 year old, the taxpayer is eligible to file a Offer and Compromise application. The application also requires that you file all missing tax returns. So again, we just keep going back to the importance of filing returns. The application itself for an Offer and Compromise is located on the Attorney General's website and can be submitted electronically or printed and mailed in. Also, if you need a mailed copy of the application, you can call the AG's office and request one. Taxpayers who want to make use of this program are often folks who have lingering tax debt, maybe from a long time ago. Perhaps they are in some sort of financial hardship, they're nearing retirement, or they're retired on a fixed income, or a number of other issues that they have, and they want to resolve their tax debt. So along with the Offer and Compromise application, the taxpayer will make an offer, as the name indicates. So if they have a sales tax that is old and they feel that a certain amount might satisfy the state, they will offer to pay that amount in resolution of the debt. There are three main criteria or bases for filing an offer in compromise. The first one is doubt as to liability. So say there is a taxability issue, a responsible party issue, the taxpayer really feels that they are not liable for the debt in whatever way. They must complete the offer in compromise application, as well as submit a lot of detail and give supporting documentation, tantamount to the kind of documentation you would provide with a petition for reassessment. It's a different process. However, we're looking at the same factors and trying to follow your arguments as to doubt as to liability. In the case where a taxpayer has innocent spouse status from the IRS, now let me explain that the IRS has their own process for determining innocent spouse status for federal income tax purposes. If an individual goes through that process and receives innocent spouse designation, then they also have Ohio income tax debt for the same year, they can make an offer in compromise, often of zero, providing the information about their innocent spouse status. And often it will always include submitting that documentation from the IRS. By far the most common offer in compromise reason we have is economic hardship. The taxpayer, whether it's a corporation or a person, does not have the ability to satisfy the debt. And we look at a number of factors. The application will ask for statements of all the taxpayer's assets, including property owned, bank accounts, business accounts, peer-to-peer accounts, crypto accounts. Basically, we'll ask for a full financial disclosure if you are asserting that you don't have the funds to pay off your taxes. This is a lot of documentation required. We want to do a thorough job of making sure that we understand the taxpayer's economic circumstances and any other circumstances that they think that the department or the AG's office would consider. And so we review those on a case-by-case basis and make determinations on whether settling a debt because of economic hardship is warranted. So once the AG's office and the department decide together whether to accept an offer in compromise, they will either accept it, they can make a counter offer on the offer in compromise, or they can reject it. The decision about an offer in compromise is not appealable, but you can, in most cases, you can file another offer in compromise in the future if it's been denied. If the offer is accepted, the AG's office circulates an agreement, and that's signed by the taxpayer, the Attorney General's office, and the tax department. The taxpayer must make payment pursuant to the agreement. If payments are not made, the offer and the agreement is nullified, or if any fraud or misrepresentation occurs in the application, the agreement will be nullified. Again, I just want to conclude. I want to thank you guys for listening to this presentation that takes you from billing all the way to certification and talks about some specialized areas in between. This will conclude our presentation for today on notices. I want to thank you guys all for attending. Lindsay and my contact information is included on the last slide, and we want to just thank you so much for attending the OVTA.
Thanks, Katie and Lindsay. We had really good audience interaction in the chat, so they were riveted, I'm sure, by all the information that you provided. So thank you very much. For our audience members, we are going to take our second break of the day, and we will return at 10:55. So we will turn